Hello, everyone, and welcome to another edition of the Southern California Housing Market Update. This is for June 7th, 2022. My name is Stephen Meade with Domicile Real Estate, and we are real estate for people who love houses. So welcome back, and we're going to talk about something that is kind of a fun topic of mine, and that is you are probably asking the wrong questions about the real estate market. We talk to a lot of people like to ask questions about the market. And my guess is that you are asking at least one of the following three questions. And I'm going to tell you why there are problems with these questions. So number one question is, how is the market, right? That is not a very good question. And I'm going to tell you why in a second to be asking. Question number two, is it a good time to buy a house? That is also not a good question to be asking, not one that will really help you make good decisions. And then three, the third question that you are probably asking, and this one is my favorite, is what should I offer on a house and what are houses going for right now? Below, at, or above list? And that is also a very bad question to be asking, and I'm going to tell you why. So in a perfect world, how this works is I go over a video and I will tell you how the market is, and you will know exactly what to offer on that next house or what to price your home at. If you are putting your home up for sale, you will know exactly what strategy and you will know what it is going to sell for. Now let's get out of dreamland, because that is not going to happen. And it's especially not going to happen right now. And the reason it's not going to happen right now is because we just have a huge amount of market stratification, and it's not stratifying across what are sort of the normal variables. And what do I mean by that? Normally, right, we talk about the market being different at different price ranges. We talk about the market being different in different areas, and both of those are still true to some degree. But the big one is what we don't usually talk about is the market being different based on the home's desirability. And the reality is this is actually true most of the time. It has not been true in the last 12 months or so, 12, 18 months. That's the part that's unusual. We've gotten used to just the market being the market, this monolithic sort of entity where advice given for one end of the market is true for the whole market. And right now that's not happening. I'm going to give you an example, right? I showed two homes in Mission Viejo to clients this weekend, right? And these are homes within 2 miles of each other in similar neighborhoods, similar sizes, and similar prices. One home recently fell out of escrow and was about 2,600 square feet and was for sale for 1.45 million and had been dropped to 1.4 million. So that's home number one. Home number two was smaller by several hundred square feet in a slightly worse neighborhood, but had a spectacular backyard, decks, and remodel. And that home was listed at 1.5, right? So these are the similar price ranges, 1.4, 1.5, not that different. The 1.4 home had limited activity. The $1.5 million home was filled with people looking at this home, and the agent has indicated that it will likely go for over $1.7 million with a flurry of offers written on it. Now, how can that be, right? Well, one of these homes is fresh on the market. The home getting all the attention, had great photos and instant desirability. Contractors are difficult to come by right now. People don't want to do these kinds of renovations. And given where prices are, they don't have the money to do these renovations. It is easier to qualify for a bigger loan. So what you have is a very big difference in desirability, and your strategy would be completely different for both of these homes. So it really depends on what end of the market you are looking in, not just in terms of price or location, but desirability. These hot homes will go, they get most of the attention. So like the top 20% of listings actually get 80% of the attention. So let's jump into the stats though, because let's talk about the market as a whole and what direction we're going. And then you can kind of get an idea where you fit within that depending on what it is you are looking at. So the first is our active listings. This number does continue to go upward. which is great news if you are a buyer. We are a little bit over where our peak inventory level was in August of last year, and we are quite a bit above in terms of total listings where we were at this exact moment last year in time, the beginning of June in 2021. Now, if we look at our new listings are actually down, and I think this is kind of interesting, right? You see this kind of little shelf. I'm curious whether this is going to continue or whether this is kind of a one-time thing. I do think that there may be an effect of sellers are realizing I'm not just going to get 10 offers on my house and it's not going to be easy. And I think maybe some sellers are saying, do I really want to move right now? Rates are higher. I think the answer for some of those sellers is no. And we're going to see that in reduced inventory and reduced new listings. Our new escrows, now this number does continue to go down. We're probably about 20% below where we were last year overall. But I do want to indicate this is still a pretty healthy market. This is not demand has fallen off a cliff. And what's interesting is if you look here in this 1 to 2 million, it's really not fallen off at all. It's really that under 1 million category. We really probably should take a look at these as a whole, but basically it is down about 20 to 25% in terms of number of new escrows. If you look at our absorption rate, what does this look like, right? Our under 1 million is about where it was last year, not really that far off, maybe about where it was towards the middle of the summer, but still better than it was in early fall. It is our 1 to 2 million where things have really kind of slid downhill on that absorption rate. I think this is a function of kind of an affordability hangover, right? I think we're just seeing, buyers are flocking to these lower priced listings because they can still qualify for them easily. But what's interesting is that we have not seen prices make an adjustment, at least in the market as a whole. And I'm going to give a huge caveat when I say this, but if we look, our upper end, 75th percentile, we are trading right about where we were since over the last 2 months or so. We're maybe even a little bit higher on our median, and we are a little bit higher on our entry level. So remember, this data is 4 to 6 weeks old because this is based on closings, which is not the same as transactions being negotiated right now, right? The price is really set when your offer is accepted, not when you close. Now, I mentioned there was a huge caveat to this, and I want to point this out. Our market is very uneven, and there are very much winners and losers in this market. If you have a home that has certain undesirable characteristics, especially things that are difficult to change, what am I talking about? Back into a road, back into railroad tracks, having an awful looking house next door, having some sort of condition issues that are difficult to solve, foundation, structural, right? These sort of like bigger difficult issues, you have absolutely seen the price of your home drop. There is no question about it. If you are a middle of the road home, maybe you've seen a price drop. It depends how much availability there is in your area. And if you are in one of these top tier desirable homes, you have not seen a price drop at all. And maybe you've even seen a little bit of a price increase, especially if you have a very special and unique home. You might have even seen prices increase versus 90 days ago, especially as you head up in that upper price range toward the upper 1.1s, a lot of cash buyers in that space, they're less interest rate sensitive. So, we've got this chart here, but it really does not tell the entire story. A lot of it depends what market segment you are in from a desirability perspective. Are you one of those top tier, most desirable, unique type homes where it's not easy to find another one like it? Are you sort of the middle of the run average type home? Or are you a home that's sort of maybe got some issues and a home that really would have been great to have sold 3-4 months ago? That's really going to depend where you are price-wise in this market right now. It's not as much based on market segment as it is based on desirability within that market segment. Now, if we look at our percent still active after 14 days in the market, that number is going way up. We are hitting new highs with that. What does that mean? It means that on average, we are seeing homes sit on the market longer than they have been. And I think that's important to note if you're a seller and if you're a buyer, right? I think if you're a buyer, you might think this is carte blanche to offer whatever you want. You can certainly do that. But what we're finding is some of these homes, there's just not quite the sense of urgency, but they will get multiple bids. It is just taking a little bit longer. They don't get multiple bids over the weekend. They get multiple bids in the first 10 days, maybe, on the market. Our close to list ratio. So this is interesting, is that we are seeing these numbers finally start to adjust, right? We talked about this. Now, on average, in that 1 to 2 million category, we're still at 105%. That is below our peak. And we're seeing a very gentle roll off here in our under 1 million. We're down maybe around 103.5% of list price on average. I think both of these numbers will continue to go down towards a 100% number on average. Now, if we look at our days on market for new contracts, we have finally seen 2 weeks in a row this number go up significantly, maybe to around 21, 22, 23 days on market. Now, this is the average days on market for new contracts, meaning the homes that just went into escrow. Again, we are seeing buyers are taking their time in making decisions. They are still out there. They are still buying the houses they want, but they are pickier and they are not feeling the same sense of urgency that they maybe were experiencing or showing several months ago. Now, here is our great three-way chart. I love this graph because I think this tells you a lot about the health of the market as a whole. And one of the things that we've always talked about is this notion of purchasing and renting, right? Our blue and our yellow lines, the difference between those. If we go all the way back to June of 2018, if we zero these together and we watch how they track, look at how they tracked all through last year, tracking together. And then what happened this year? Rates went up on this blue line and those payments went significantly higher. But look what happened to our rent index. It was delayed, but it jumped up as well and then stabilized out a little bit behind. And look at this gap. This is a much narrower gap. This looks a lot more like middle of March, not that huge gap we saw through April. And this gap is narrowing. As you can see, the rates have eased a little bit and it is narrowing that gap between our rent index and our payment index. Add in the fact that we've got a high prevalence of adjustable rate mortgages, and this gap is actually pretty close if you factor that in. What that tells me is that we're not set up for a huge situation of dramatically falling prices, at least not in the market overall. Like I mentioned, if you were in one of these homes that has, some traits that are difficult for buyers to get over, you're going to feel the pain the most in a market like this. Just as you received probably the most benefit in a super hot market, in a market that, where buyers have more options, you're going to also feel the most pain in that market. Finally, we have our prevailing mortgage rates, and we sort of crested here over 5% and now are kind of dropped and leveled out a little bit. I think psychologically, this is a lot more comfortable for consumers. Anecdotally, it feels like what we had happen in our market is about 3-4 weeks ago, kind of the brakes were really tapped on that market. And then we saw kind of people let off the brakes and things kind of bounced back a little bit. And that's kind of where we're in, is sort of a, something we're calling the new normal. I've used the term equilibrium seeking. I think that's what we're starting to see happen in our market, is we're regaining a little bit of a sense of stability. Anyhow, thank you so much for watching. Questions, comments, we love them. If you are looking to buy or sell real estate in Southern California and you would like our expertise in representing you, absolutely reach out to us. We would love to chat with you. Don't forget to like, subscribe, and hit that notification bell so you will see our new videos. And we will see you again real soon.